Hi everyone. So today I'm going to be talking about the three main financial statements used in the finance world, typically when it comes to accounting. These statements are used to show how much you own, how much you owe, how much cash you have, where your money's going, basically anything involving your money at any point in time is shown in these top main three statements. So the first one is the balance sheet, and it shows the company's assets and what they own at a specific point in time. It's like a snapshot of that period of time and what the company owns at that period of time. An income statement is basically how much money a company made and spent over a specific point of time. So it's revenues, any personal liabilities it has, expenses, stuff like that is shown on the income statement. The cash flow statement is the exchange of money, cash, that goes in and out. So anything an owner contributes, anything an owner takes out for personal use, all that is shown on the cash flow statement. So the first one used is the income statement. So on the income statement, like I said, it is basically revenues and expenses, and it shows all that over the reporting period. The reporting period in finance is typically over 4 quarters, and it's basically at the top of the income statement, it says for year end blank. So for year end September 2016. Their year could be September to September, vice versa. So it would say for year end, and then it would show the revenues and expenses over that period of time. Like I said, typically it's 4 quarters, and the equation on this one is revenue minus expenses equals the net income or net loss. Obviously, if your revenues are higher, then it's net income. If it's lower, net loss. Just your basic addition and subtraction. The next one is the balance sheet. The balance sheet uses what is found in the income statement to come up with the balance sheet. So the balance sheet is basically assets equals liabilities plus owner equity. So your assets, anything you own, equals your liabilities, your insurance costs, your any payable accounts, plus your owner equity. Owner equity is, your company, your boss giving money, your boss taking money, anything like that that is happening there. And all that comes on the balance sheet. And so the balance sheet is not over a full year. It would be over a specific period. So 6 months, a month, whatever the company needs to see. If the company needs to see only a month, then your balance sheet can only be a month. The next one would be the cash flow statement. So the cash flow statement is same thing over a certain period of time, whatever time period the company chooses. And it uses 4 specific categories. So the first one being operations, second one investing and financial activities. So those are the 3 activities. And then the last one is supplement information. So anything involving cash is split into these 4 categories to come up with your cash flow statement. And like I said, the cash flow statement just shows where your cash is going, how much you bring in, how much you take out, all that good stuff. Anything involving cash is typically on this statement. So all 3 statements must be used in order. So the reason that this is because what is found on the income statement needs to be used on the balance sheet. So it starts the balance sheet. And then what is found on the balance sheet needs to be used on the cash flow statement. So basically, on on the income statement, you find the net income, net loss, correct? So you're going to use that, and you're going to find retained earnings, which is on the balance sheet. So then you're going to use both the net income and the retained earnings to use your cash flow statement, and there you find your cash. And so basically all 3 statements are used to find your any money, cash, credit, debits, anything used over that time period. These 3 statements can show it. And I know this because I studied any finance class. I've taken personal finance, I've taken managerial finance, management finance, information systems, accounting. I've taken all those classes for the past 4 years. Therefore, I've studied these 3 statements and I know them like the back of my hand. I could describe it to you, eyes closed, eyes open, jumping off a roof, because I've just put so much into these. So I really hope that you take this and you learn from it. Thank you so much for listening.